Very quickly, let's get your view on the NSE 20 and where you see it going right now, because it's sitting up 14%, it's sitting at a 9-month high. How sustainable is this bull run?
I think there are two factors that I can immediately highlight that have accounted for that rally. One is that the market for most of last year was lost significant value. And as a result of that drop in value, the market has become very attractive in terms of valuations. And that is why we've actually seen a lot of foreign investor participation in the market. It's been at levels of about almost on average 70% of the market. So there's a lot of foreign interest in the market. The second factor is the interest rates. Coming from the very high levels of interest rate at the end of the year, we've actually seen a substantial decline in interest rates, to the extent that for now, the latest auction on T-bills, we are now at 10% from 21% at the end of last year. So that also is a factor that accounts for the decline in the, for the upsurge in the market. So I think for as long as that element is the element of interest rates, continues to decline, we are likely to see that a further increase in the valuations in the market. So we may be in for
yeah, Einstein, it seems very much like the market is very much disconnected though from what's taking place globally right now, because just looking at the screens in the markets in Asia, we've got markets there tumbling. The Nikkei is down by 3% this morning. It's been a torrid week. At what point in time are we going to see that kind of risk aversion being affecting the local market in Kenya? Because at this point in time, it seems very much disconnected.
Yes, I agree with you, and I would imagine that at some point in time, that is actually likely to come into to play. But I think it's also a reflection of the optimism that exists in terms of looking at the investment opportunities in the market. Granted that you're quite right that the markets in other countries, particularly in the developed markets, are not doing well, but it's also a reflection of the economic situation in those particular countries, particularly the Eurozone. Yeah. But I think as a result of the significant investment in infrastructure, the very low valuations that had prevailed in the market for quite a while now, that would account, as I said, for the fact that we are seeing the upsurge in the market.
Yeah, let's move on to some of the results we've seen coming through, because Standard Chartered Kenya coming out with some really strong results yesterday. Q1 profits up by 41%, revenue up by a third to 5.5 billion shillings, and that enough to put it into top spot in terms of profitability ahead of Barclays Bank. Kenya, what's fueling their strong earnings?
I think as looking at the results, we've actually seen a significant growth in their loans and advances. And that accounts for the significant growth in terms of the profitability, in terms of earnings. And when you compare that to the loan book of Barclays, which didn't record significant growth, I think the key factor is that despite the fairly high level of interest rates, Standard Chartered was still quite active in terms of growing their loan book. Yeah. And that, I think, primarily accounts for the increase that we've seen in their earnings, which are quite strong, as you have said. It's
interesting, the trend that we're seeing with banks really defying the high interest rate environment right now. Looking at Barclays Bank of Kenya, a profit before tax came in 22% higher. As I said, that was a lot less than what we saw from Standard Chartered Bank. But one of the analysts coming through and saying that they see Barclays as too expensive right now relative to the sector, and they don't see it as a buy given the fact that it's trading at such a premium right now. What are your thoughts on that view?
I think in terms of the growth in numbers for Barclays, there's also an element of a decline in the loan loss provision. They've been fairly conservative in terms of growing the lending book, and I think it's also they've been fairly careful about how to manage that growth in the loan book. But I think there is still, in my view, some element of optimism in terms of the expectation on the growth for Barclays, but I would say it's much less than you'd see the case with other banks, because other banks have been actually quite active in terms of growing their loan book. And as we see interest rates declining, it may be we are likely to see even better growth in earnings for these other banks. compared to Barclays, which has been fairly conservative.
I'd like to go back to a point you made earlier about the high interest rate environment. Why do you think banks have been beating expectations with Q1 results and really defying, as I said, the high interest rate environment that we're sitting with in Kenya right now? And of course, inflation has come down substantially, but it's still sitting at around 15%.
I think it goes back to some of the measures that were taken by the Kenya Bankers Association and the Central Bank and the Treasury last year in terms of trying to manage the upsurge in rates by trying to make sure that in cases where the rates of interest, the monthly repayments would increase significantly, they try to manage that by extending the loan repayment period. And that way they were able to manage the impact of the significant rise in interest rates on the customers. So I think that is an element that has helped them in terms of trying to manage within this high level of interest rates, such that we haven't actually seen a significant increase in the loan loss provision despite the very high levels of interest rates. So I think it's a continuation of the ability to manage those customers and also trying to interact, trying to stress on the quality of the loan book.
Yep.
As opposed to what we had seen in previous years.
Okay, going forward for the rest of the year, if you had to be betting on one bank that is going to be the outperformer in terms of the share price, which one would that be? I think we've actually seen KCB record significant growth in the last, in the share price, since the beginning of the year. And I think backed by the very high, they're now putting in the significant capital they raised into the market in terms of branch network expansion and growing their customer loans. So I think looking at the trend so far in terms of the share price, I think KCB has actually given a strong indication of the expectations that the market has in terms of the share price. Shifting focus to the oil and gas sector, Kenyan Kobel, of course, is the target for Puma Energy, and Kestrel Capital coming out saying that the shares are trading at 12.50 and that they see the offer coming in above 20 shillings right now. What are your thoughts on the type of premium that Kenyan Kobel shareholders are going to get? Because if Kestrel Capital's right, that would mean that they get a 68% premium to the share price right now.
I think in line with the rest of the market, companies listed at the stock exchange, Kenol had also been quite significantly undervalued, compared to the net asset value of the business. And I think it is a reflection of that and the expectations, looking at how the business has grown over the years, particularly in terms of the regional expansion across the region, in terms of opening up of various stations across the region, and also the involvement in active trading in terms of the international crude oil. I think it is an indication of the fact that there is a significant underlying value in the business, and I think part of it has to do with the expectation that as we are seeing the trend in the stock exchange, ultimately, if the company had continued, the share price movement had continued consistent with what we've seen in the market, I think that premium that the shareholders will get is a reflection of both the underlying business and also the expectations of how the market has been moving in line with the upsurge in the Nairobi Stock Securities Exchange.